All right, everyone. I wanted to bring everyone together, make a new video for you all to study, review. There are a lot of common questions that I've been repeatedly seeing for the past 3, 4 weeks. And I'm just going to start it off very basic, very simple. I start every single um, video session off with this very same debrief. Now, I just want to remind everyone, this is our model. This is our model. This is what we're looking for. Pump, coil, dump, dump, coil, pump. Now I'm going to get into the juicy part in here in just a sec, but this can be with the trend, against the trend, uptrend, downtrend, consolidation, 3 days, 3 sessions, the session itself, 3 weeks, 3 days, etc. Doesn't matter. This is our model. Now, I also want you guys to understand that markets, they only do three things. Now, there's a few patterns that I'm going to bring up that are very basic, very familiar. We have our M's, we have types of M's. We have the regular M, we have the shortened M, we have the extended M, right? We also have a head and shoulders. Now, if you're long bias, just flip this, but stick with me for just a second. The, these are the most common patterns that we're going to be hunting, trading in general, these patterns. Now, I get the question about how do I enter the market? What is the coil? Um, it's hard to see the coil. It's hard to enter the market. If you're not understanding the model itself, these entries won't make sense. Now, let's just say that, for example, you like to trade the top. Okay, well, that would mean that you're trading the edges every time. They get to our resistance level area. Now, stick with me because this is the basics of what I'm really wanting to get into. But they get into our resistance area, and you just press L. Engulfments, pin hammers, just press the sell button, place your stop above. Okay, if that's a little too scary for you, trade the breakout. The breakout of this pattern, in patterns, head and shoulders patterns. Trade the breakout. Get in there. If you're not trading the edge, trade the breakout. If that's too fast or too scary for you, there's always a retest. There's always a pullback and there's always a continuation. Always. Not sometimes. Always. If you're coming from the high of the day, high of week, oftentimes even the high of that session, there will be a continuation pattern. So there's usually 3 areas where you can always enter the market. And even just looking at this here, you can trade the top. You can trade the breakout. You can trade the pullback. It quite literally does not matter as long as you're getting in, keeping it rinse and repeat, and very simple. So this is what I really wanted to get into. We're looking for our signal days. We're still doing the same thing. We're on the daily chart. Nothing's changed. We're looking for signals. If you don't have a signal, you don't have a thesis. We're identifying our levels. Now, I brought everyone here today because I want to demonstrate how powerful these levels are and why they're very powerful. So, for example, we can get markets that break out, pull back into a level and trend. But what's so important about this level is it would be an entire area based off of our 3 levels. Markets can break out, fail to go higher, because if they wanted to go higher, they would have. Now, if they make a higher high pullback and jam into these highs, they're failing to go higher. That's not for no reason. There, you'll see wick rejections, you'll see exhaustion, and you'll see a shift in behavior in the other direction. Again, this is just a larger pump and dump. But markets can break out, pull back, and trend. They can break out, fail, and reverse. Or if they're in a trading range from high to low, they're quite literally just trading from high to low, back and forth. Now, I'm not saying to trade that, but what I am saying is there's a few patterns, and I have plenty of charts, but there's a few patterns that we're going to go over. The break and retest is probably going to be you guys' favorite, but we're going to go over these patterns and just demonstrate a very simple process to enter the market, to always be at the right area, right level, etc. So just a second. Okay. So UJ, pretty interesting week. You see our levels here, and this is every time frame. Now, I'm not saying to draw these out on every time frame, but this is fractal. You see how UJ is in an uptrend, right? This is a daily chart, by the way. UJ has been on the way up. You see the previous month high, low, and close levels. They're important. That's what we want to focus on. Even if this is a 4-hour chart, 1-hour chart, 15-minute chart, doesn't matter. Why these levels are so important. These levels give us our support and resistance zones, levels, areas, quite literally where the market is either breaking out, pulling back, and what am I looking at? The wicks. Because what are the wicks? Wicks on a smaller time frame, what do they represent? Now, I'm just gonna tell you the answer. They're peak formations. They're high bulls, low bears. Um, order blocks, if you want to call it that. But look where these zones, levels are at, or near, even near. Now, this is just to show you, once again, if I'm down low, for example, they broke out. Yes, this was an inside month. They consolidated, but we're failing to go lower. Failing to go lower. First Green Day signal. Breakout. Pullback. First Green Day signal. Breakout. Pullback. First Green Day. Breaking out. Pulling back. Respecting. First Green Day. Breaking out, pulling back, first Green Day. It's that simple. Now, I'm not looking for where the market is going to go. I do not care where the market is going to go. I'm not trying to figure it out. Now, I'm going to get into what happens when you end up chasing the market. I'm going to get into that in just a sec. But let's just go into this first Green Day for a second, just to reassure the process. Whenever I get a signal day, what are we looking for the next day? Now, again, I'm showing you guys these levels, these areas, because once again, markets quite literally only do three things. Now, just to back it up for just a second, Monday gave us a peak formation low. Tuesday gave us a peak formation high. Wednesday was breaking down, or shall I say, breaking out and pulling back. Because what did they do at the high of the week on Tuesday? They put in a high and they failed to go higher. Look at these wick rejections. Look how many times they've exhausted into that area. And then they break out and pull back for continuation. They break out and pull back for a continuation. Look where these levels or zones or areas are at or near. They break out, they pull back. They break out, they pull back again. Whoops. So here to the left, Wednesday's low. They break out, they pull back, and they continue to trend all the way to the low of the week. We get wick rejections, we get failures to go lower. This would be considered, honestly, 1, 2, 3 peak pattern, triple bottom, whatever you want to call this, double bottom, etc. We get our first green day signal here. Now, the very next day, train your eyes to move horizontally at these levels. If the market broke out and they're failing to go lower, guess what this breakout level is now becoming? It's resistance turned support. On the day itself, they gave us our dump coil pump, but as long as you got in that zone, you made money. You're good. As long as you took a position at the closing price, you're good. New York session, they broke out. Mind you, they broke out and pulled back. They broke out, pulled back for a continuation. Now let's just back it up just for a second. Step 1 is my signal day. Step 2 is my levels. I'm not looking at or for levels if I don't have a signal day or signal day from days ago. But I'm going to get into that because I'm not saying to chase the market. If you get a first red day for Monday, for example, let's just say Monday is your first red day. Tuesday gives us our first red day trade. Wednesday gives us a blow off. And then traders come into Thursday and they're like, oh, first red day, pump and dump, right? We're in a downtrend, so I'm looking for pump curl dump. And then Thursday ends up doing this. Look where you're selling. We want to sell high. We want to sell high. You're selling the low of the week. You could be selling the high of the day, but you're selling the low of the week. And here's also something very important to understand. Each and every pair max. Now, when I say max, this is not every time. Usually it's just 2. You will get 1 parabolic on the front side and 1 parabolic on the back side. If there's already been 2 days where the market had an all-day fade or a parabolic reversal or a trend, there's been 2 days out of that week already, leave that pair alone. There's nothing there. I promise you, there's nothing there. So get into the habit of using the weekly template. Look at Monday, Tuesday, Wednesday. That's the front side of the week. Wednesday, Thursday, Friday. That's the back side of the week. So let's just say Monday gives us our pump day. Again, Tuesday, let's just say gives us a first red day signal. And then Wednesday gives us our day 3, boom, our textbook first red day. And they close in breakout. Now we're on the back side of the week. Wednesday's our new day 1. Thursday is our new day 2. Let's just say it's an inside day. And then Wednesday gives us our breakout, pullback, continuation trade back to the high of the week. But we had parabolic trade number 1 on Wednesday and parabolic trade number 2 on Friday. That's not always Wednesday and Friday. On certain occasions, it can be Wednesday and Thursday. So Wednesday and Thursday both go parabolic, and then there's nothing else for the week. Or it may just be Monday and then Friday. So Monday, parabolic day, Tuesday, Wednesday, and Thursday, chop days. And then Friday is our second parabolic of the week using the weekly template. Now, again, you can actually get a max of 3 parabolics in 1 week, but that's a max. I want you guys to go back to your charts on a 1-hour chart and just count how many parabolics actually show up for the week. And you'll get the memo that by using the weekly template, by understanding the weekly template, you may only get 1 or 2. So let's look at UJ last week. We get our closing breakout. Let's just say traders are resetting and they have not traded Monday. They've disregarded last week's price action. Closing breakout signal. Okay, fine. We get a breakout pullback continuation trade on Tuesday, the range expansion day. Parabolic, ACB ain't coming back. Breakout pullback. Wednesday was FOMC. I wouldn't necessarily call this a parabolic day because they actually closed as a signal day, inside day, signal, first red day, signal. But we get our second parabolic on the backside of the week. They broke out. They pulled back for continuation. There was quite a few traders that was excited for this first red day, inside day on UJ because it was, 1, very obvious. 2, it was on the range reversal day, Thursday. 3, this is actually in Stacy's playbook. It's called the second day trade. It happens after huge events such as FOMC. If FOMC ends up giving a nice push, you will get a continuation trade the next day, calling it the second day trade. So all that momentum from the news release being driven into the next day. We have our signal day, and we have our signal on the day, lower lows. That's the recipe for the pump, coil, dump. Now, as of right now, I'm not necessarily talking about entries, but if you was to enter this market, bang, get in up here at the zone. Get in up here at the high. Get in here at the breakout. Get in at the retest. Get in at the previous day's low. When you understand these templates, it doesn't matter where you get in. All you had to do was just get in. So even on a 15-minute chart, let's just remember our basic models from the very beginning of the video, the M's, head and shoulders, and simply just understanding that when a market breaks out of a structure and pulls back. Now you see they broke out and pulled back above to the closing price. Okay, that's an entry. Now mind you, this is the London session. This is late in the London session, but this is still tradable. If this was outside of your timing window, don't worry about it. But this is just to show you structure is structure no matter what time frame you're trading. And look what's happening here. Higher high, failure, lower low, lower high, lower low, lower high, pull back, lower low, lower high, lower lows. Even if you're late, traders will see a market that's taken off like this and say, oh, I missed it. What did they do right here? They broke out. They pulled back. They retested. Look left. Train your eyes to move horizontally. Look left. This is actually a quote by Steve Morrow. Look left to trade right. When you understand that, you'll look left. And remember, we're looking for M's. Breakout pullback. Double tops, double bottoms, head and shoulders. How do you trade these? You can trade the edge. You can trade the breakout. You can trade the pullback. You can trade the retest. You can trade the breakout. Just get in. If you're not consistently doing this, and I mean over a period of at least 100 trades, I'm not talking about 2-3 trades. You're taking break-even trades. You may be taking losers, which we all take. And then you say to yourself, What am I doing wrong? You're not doing anything wrong because, first of all, why are you focused on the outcome? With this job, this is what makes it so hard. The outcome can distract you from your actual process. So become process focused. Do not become outcome focused. Now, this is actually something that some of you may run into because I know for a fact it ran into me. When you actually start making money trading, that's when the real test appears. What do I mean by that? Because little did you know that winning trades can throw you into tilt worse than a losing trade or worse than a losing period. Because with all that euphoria and with all that the chemical reactions going on in your brain, you're getting excited. Dopamine is being released. Um, you're feeling accomplished. You're feeling like you're on top of the world. You're feeling like you're doing something that clouds your judgment, that clouds your reason. Reason is out the window. Logic is out the window. Um, your setup, your process just gets thrown out the window. You take a trade one day, you don't care about the risk. You feel like you're on top of the world, you can't do wrong. And that's the day where all of that just comes crumbling down just as fast as it was brought up, if not even faster than it was brought up. So we're focusing on the basics, the process. We're not focusing on how many trades you win or lose, because honestly, just in personal experience, I lose a lot, but my winners always bring me back my losses plus more. Now, the less I've been trading, the more I've been confident to size into particular trades, like the gold trade last week, the NASDAQ trade on Monday, the gold trade on Tuesday, because I'm just focusing on the model, the process. I don't actually care if I'm right or wrong. And a lot of the times, funny thing is, the same emotions that you guys, gals, are going through, I'm going through the same ones. I get doubtful often. As a matter of fact, every day, every trade, I get doubtful. Am I doing the right thing? Do I know enough information? Is this the coil? Is this the dump? Is this the pump? Is this a valid? And I hate that. I hate that word. I hate the word valid. Is this a valid first green day? Is this a valid first red day? Is this a valid trading day? Is this a 3-session setup? Is this a 3-day setup? All of those questions still pop up. They still sometimes overwhelm me, but I don't care about that. I just care about following step one and step two. Step one and step two to the best of my ability. If I have one and two, whether this is a 3-day setup, 3-session setup, I know according to my entry model, these are the two most common, that I'm just trading the edge. The edge. Now, I'm not trading the tippity top. Now, when they come back to that range or inside of that range, that's when I'm getting in. That's still the edge. Or I'm trading the breakout. Or if I miss that, gold is a beautiful example. Perfect example on Friday. Because it actually blasted off from the high of the day. Let's go to a smaller chart here. It was a blast off. Let's get rid of these numbers. Let's get rid of the EMA. I just want to show you something. This is a pump and dump template. They pump it up. They go sideways. Now, I do not care about lower lows on the inside, higher highs on the inside. According to my entry model, which is very simple, I just want to trade the edge or the breakout as they're breaking out. Or a lot of the times, it may even just be better to wait for that initial pullback because now you own them. Now you're certain that the high of the day is locked in, because how do you know the high of the day is locked in? They're breaking through structures, rectangles. They're breaking through them. These zones, let me just be even more specific. These zones, because it's not just a line, you should be looking at the entire area. You see the wick rejections? That's telling us something. That's quite literally telling us that the market is exhausting. There's a lack of bullish sentiment, and that sellers are actually stepping in. Higher time frame selling will be on the outside. Higher time frame buying will be on the outside. If you're on the inside, you're just simply on the inside. Now, I seen the question a few days ago. What is a lower low on the inside? A lower low on the inside is exactly that. We're on the inside of the EMA. We're on the inside of this front side trend line. We're on the inside of the peak formation low, peak formation high range. Lower low on the inside is the recipe for the pump and dump. Even though this is low hanging fruit, it's still our model. They pump it up and they go sideways for 2 bars. They engulf, you're in, or you're in at the wick rejection. You may have a sell limit in this zone. You may have buy stops at the break of that wick. You may be market executing at the end of the engulfment. You may be even taking, you know, granted that you're this scary, but if you are that scary, you're waiting until they get to the previous day's low. You see how they broke out, they pulled back. And even this small little move, it looks tiny, but it was still 20 points, 200 pips. This was a collapse. So you're telling me out of this large collapse, which was 800, 900 pips, that you can't get 150 by keeping it very simple? Entry, entry, entry. Same thing with silver. Silver was the one that I took. Unfortunately, once again, I will say, I woke up late. I woke up right at 10 a.m. I had silver already on my watch list. I hurry up and go to my charts. I see this consolidation. I check the clock. Now 10 a.m. is 9 o'clock for me because I'm in Central Time. So it's 9 o'clock. They engulfed. I was actually on a 3-minute chart. They engulfed. Now I didn't necessarily get the opportunity to trade the edge. I like to place a starter position up here. But what I decided to do was, as soon as they were breaking this low, I just placed the position. I just got in. I look and check my phone. 15 minutes later, my TP was already hit. I just had a TP at the low of the day. This is a textbook pump, coil, and dump template. Now let's just zoom out so I can get some perspective here. The wicks are what I'm looking for. You can use a 1 hour, a 30-minute, a 4 hour, a daily. It doesn't matter. And here's why. Because structure is structure no matter what time frame you are trading. Now, silver just came out of a range. Consolidation, 1 second. Someone's mic is not muted. All right. We're coming out of a range. Now, these zones, areas, mind you, trade near or from these quote unquote key levels. Trade from a level or trade at the low of the week, that current week, or the low of that current day. You see how they're failing to break lower. They're working into this low. That's a triple bottom. And the more we zoom in, the more clear that gets, the more detailed it will get, obviously. The lower the time frame, the more um the trader may be manipulated because there's more swings back and forth. But if you just zoom out, this market is breaking out and pulling back. It's breaking out, pulling back. And then we're breaking out and failing. So you see that wick rejection? It's not for no reason. That's a pin on a smaller time frame. That's a peak formation, a high bull. But even more so, it's exhaustion. Buyers have stepped in and pushed price 50% of that candle. Now they're working into that candle, they're working into the highs. I like to use the 1 hour time frame. I think it's a very precise time frame to identify peak formations. What are peak formations? Once again, they're just swing highs and swing lows. The easiest way to identify these are the pins. The pins. Those are your peak formations. Now, if you're looking for a trend trade, you need a peak formation and they need to work back into it, or they need to break out and pull back on top of a peak formation that they just broke, or they need to put in a peak formation and work into it for the reversal. Now, on the day itself, yes, they broke the previous peak formation. Now, on a higher time frame, this is an extended M formation. But on the day itself, because even that doesn't matter. On the day itself, they put in a P formation. You see how they pinned here? I'm drawing that across. They work away from it. They work back into it. Anywhere here is an entry, anywhere in this zone. Or you're trading the breakouts. Now, silver doesn't exactly give a retest up into here. This is a monkey hammer template. This is 3 days of longs in the markets. They do pull back on a smaller time frame. So on a smaller time frame, there is secondary entries to take. And I'm just going to show. Wait for them to put in a peak formation or a breakout level and wait for them to return back to it. They break out, they pull back, break out, pull back, break out, pull back, pull away from it, pull back into it. This is a double top. My original mentor, his name is Rox FX. You can look him up on YouTube. Where we weren't supporting resistance traders. We were simply just trading the behavior of the markets by just identifying basic structure on a daily chart, 4-hour chart, 1-hour chart. We would drop down to the next time frame and observe the behavior. So we're looking for wick rejections, exhaustion, signs of the market failing to break higher, or signs that the market is retesting a breakout area. And then we would drop down a few more time frames to our entry time frame. And on our entry time frame, we're just looking for patterns. Breakout pullback, head and shoulders, etc. Just keeping it very, very simple. Now, at the time, this was the pattern that I had chose to focus on, was the breakout pullback. Because in my opinion, I didn't care about being first. I just cared about being certain. Now, they didn't necessarily pull back into this level unless you took it here. But this is just to show you that the entries is not your problem. That's not the problem here, because you can get in anywhere. The problem is the process. So yes, you may be taking losing trades, you may be breaking even, but if you don't have at least 90 to 100 trades to refer to, again, you may just be outcome focused, which is the biggest problem. It's hard to get out of. I can't even lie. Sometimes I get pushed back into an outcome-based thinking. Oh, I need to make this much this week. Oh, I need to make that much. I don't care how much I make. The only thing I care about in the present moment is did I execute the pump coil dump efficiently? When I see a pump coil dump, did I take a position in this zone at the breakout, at the edge, at the retest? Gold gave you your retest, silver did not. But whether it gives you your retest or not, you cannot let that swing you into tilt because it will. The Thursday gold trade. Let's just zoom out for just a second and we're going to use our levels. Now, again, I'm showing you why these levels are important. If you're not looking at these levels, or again, it's step one, signal day. Step two, levels. Now, I'm not just looking sideways. I'm looking for breakout, pull back scenarios. I took the short trade on Monday. I'm looking for breakout, pullback scenarios. I took another short in Asia. I'm looking for breakout, pullback scenarios. I took the long trade on Thursday. Did I hold it? I should have. And then I went short on silver. But point of the matter, I'm just showing you why these levels, zones, areas. Because look left, look what we have. Look left, look where we're at. Look where we're at. Look where it's coming from. Look at all the possible entries. You can trade the edge. You can trade the breakout. If I go to a smaller time frame, the pullback was there. That's what this 1 hour candle did. They broke out and pulled back. That's what that wick is. It's a pullback. Then they continued to trend 10 a.m. club. So emphasizing timings even more. But these levels, now again, it doesn't matter if it's right or wrong. I can already hear that. How do I know it's right? How do I know it's wrong? If you don't have a signal day, you don't have a thesis. So it's signal day first. Even if I was to draw it like this, they're still breaking out and pulling back. Now, just because I'm at this zone doesn't mean I will get in immediately. I need bullish sentiment to step in. I need to see a change in direction, a change in trend, a change in behavior, backside behavior, higher highs on the backside, which again, I don't care for that. But if you're in a trade, that will give you confidence to stay in the direction of that trade because the trend has changed. The behavior has changed. Let's drop down. Once again, we can trade the edge. You can trade the breakout on the way up, 8 o'clock, 8:15 to 8:30, pin hammer, 8:30 to 8:45, engulfment, 8:45 to 9 o'clock, that they're breaking out. 9 o'clock to 9:15, strong momentum up. From 9:15 to 9:30, I placed my first initial positions here. They push up, they pull back. I was not scared of this pullback. This pullback actually excited me because this is where you can scale in. Now, I did have a position at break even, so that position actually got stopped at break even. But as soon as they opened the new 15-minute candle at the closing price at our breakout level, bang, 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 bang on the way up. So honestly, what I would have made if I would have held this trade, I made it at the high of the day. And that's why I closed early. Now, I still had emotions that I had to work through, such as FOMO, because in my head, I should have held the entire move. But again, switch your mindset from being outcome focused to process focused. This is a very clean dump, coil, and pump template. The Asian session, if you were on the chart at the time, they break out, they break back inside. What is this? It's a false break reversal. At the time, the pump coil dump template. So if you're looking for that, mind you, I am short biased, but occasionally I do take longs if they're really clean. Now, if you have not mastered one side, you should not be taking the other side. Now, I'm not going to hide this secret or hide the fact that I do invert the chart. I inverted this chart. I seen them break down and pull back. I said, oh yeah, I'm definitely selling. There's no way I'm not continuing to sell this. There's just no way. This is a pump, coil, and dump pattern. For me, I see these a lot better. They're a lot clearer. I'm more confident with these. And yes, I did invert the chart and I just pressed buy on my MetaTrader and I took the money. But to go into another example here, oil was another beautiful example of how market structure just plays out. Markets only do three things. Now, I'm zooming out just to give a bigger perspective here. Now, I'm only looking for signals. But if you're one of those traders that's too, well, it's too vague, as I should say. If that's too vague, let's look at the market structure. You see how they broke out and pulled back here? Breakout, pull back. And then they put in a low and pull back. This is our initial breakout right here because this is our shortened M. So as soon as they put in that middle structure, they break out. So what you can do is you can highlight that. And as long as they're breaking out, pulling back, breaking out, pulling back, respecting that area. Because not all the time will they pull back to the closing price. Not all of the time will they pull back to the breakout level. They won't do that all the time. But the majority of the times, they will pull back to the most recent breakout, pull back. You get your signal day confirmation, candle confirmation, behavior confirmation, breakout, pullback trend, breakout, pullback trend, breakout, pullback, closing breakout signal, closing breakout, reversal trade. So let's just zoom in just a second. Now I have it to where when I'm marking up on the daily, it doesn't show up on any other time frame. But if I mark up on the 1 hour, that's the only time frame that I care about that will actually bleed into my smaller time frames. Now, a few of you guys, I've been talking about these zones, and I did say at first I'm only marking them on the 15-minute. But what I've noticed is the same zones that I draw up on the 15-minute are inside of the 1 hour zone. Again, structure is on any time frame. So I've decided to just use the 1 hour charts because it's pretty clear and clean with structure as far as structure goes. You see how this market broke out and failed. Mind you, this is one of the closing breakout variations that we're looking for. One of them is that, again, they will coil into the day and then break down. This is what we're seeing here. Another one, my favorite one, if you was to ask me, is that they break out and then coil and then break down. Because I like to trade from the outside. I like to trade from the edges. From the outside, these tend to be more explosive, even though, mind you, doesn't matter because this was still an explosive reversal trade from the high of the weeks last month. But let's just take a look at what's going on here. They're breaking out and pulling back. No, they do not pull back to Friday's breakout level, but they pulled back to the most recent peak formation high. They pulled back. What did they do the next day? They broke out and pulled back. Continuation trade. Okay, they break back into the structure. That doesn't mean that we're bullish. Train your eyes to move horizontally at these levels. We're still in a downtrend. We're still on the backside of last week's price action. The first red day is still in place. Breakout traders are still driving this move down. They pump, coil, and dump again. On a smaller time frame, they break out and pull back for a continuation again. So this is just to show you lower and lower into the week. Now be cautious. They did give a high day sell, but these are more likely to fail because we're down low. I wouldn't be surprised if tomorrow does something like this. Inside day signal. We'll see. I have no idea what they're gonna do, but all I see is that they dumped and they went sideways for just a second. So a continuation lower is highly unlikely. Look at this wick rejection here. Oh, I didn't take that trade because they didn't trigger the previous day's low. A lot of the times they don't even have to. For example, oh, I didn't take this trade. They didn't trigger the previous day's high. That's fine, but the buying pressure has already stepped in. They've already failed to go higher multiple times. And if you just count the peaks here, 1, 2, 3 peak pattern, that's a head and shoulders. Here's your neckline. Here's your death candle. They're not coming back. They break out, they pull back, they retest. They're not coming back. They're going all the way back to hit stops. Another example. 1 second, guy. I know this is a lot, but we're almost done. Another example, US Swiss franc, in my opinion, gave one of the cleanest first red days I've seen in a long time. They closed in breakouts. And let me just draw this up. Look what's happening here. Look what's happening here. They're breaking out and pulling back. Breakout, pullback, continuation trade after our first red day signal. Pump, consolidation, dump, template. Free cash Thursday gives us a follow-through trade. So this is technically our second red day trade. They break out, they pull back, they continue to trend. Look at this wick here. On a smaller time frame, just go look what that is. And you'll see why I'm drawing these across. They break out, they pull back, they continue to trend. Now on Friday, here's an example. Like I was saying earlier, the lower and lower you are in the week, especially if there's already been one, I would consider this a parabolic trade for London. 2, up, here's the third parabolic. What are you doing down here? There's nothing here. Look at the weekly template. They've already completed the pattern. There's nothing here. Now, as far as following the process, that's all you have to do the next time. So whatever you did here, do the same thing the next time. And I guarantee you, you'll either win, break even, or lose. You can't control that, but you'll win more times than you lose, for a fact. Or your winners will make more, significantly more, and even make up your losses. So just to go to another example, nat gas. I'm not necessarily cherry picking here. Technically, you should be cherry picking anyway, but we're just looking for basics. Basic market structure, breakout, pullback, pump, coil, dump, breakout, pullback. Now, again, the lower and lower you are, the more susceptible you are to risk. Nat gas did give a Friday continuation trade. Now, if you're selling lower and lower, I would rather see you trading a breakout pullback because at least they gave you a signal on the day. At least they triggered other time frame traders. There's higher time frame sellers involved in this scenario. Even though we are selling low, we have a signal on the day. And if you go to our daily chart, there's plenty of space back down. We had a false break at the very beginning of the month. And again, we can just draw these zones if you're not certain. And if you need to do this, just so you can visually see what's happening here. Do you see what's happening here? Does anyone recognize this pattern? That is the trap and shift. They consolidate, they break out, they break back in. Guess where they're going? They're about to hit those stops because they trapped everybody long. And they're not just gonna to drown them underwater. They're gonna break their arm and their leg. They're gonna put them in significant pain because they may be holding this, they may be adding to losers. This is just stuff that the majority of everyone is doing. Let me not say it like that. This is just what human behavior has proven time and time again. We get greedy, we get fearful, we get doubtful. Cognitive dissonance starts to kick in. We say and believe one thing, but we're doing a complete opposite, the complete opposite. You know you shouldn't be buying this, but you're still buying it. You're calling that a first green day. That's not a first green day. That's a pullback. Look at these areas. Look at these levels. When the market gets to one of these levels, they're either breaking out and pulling back, or they're breaking out and failing. And just remember what I said about this pattern. You can trade the edge. You can trade the breakout. Do not call the first green candle a first green day, because I promise you, it's probably just a pullback for a continuation. Do not, repeat, do not call the first green candle you see after this large move down a first green day. I guarantee you it will not be. Let's just go back to the basics here. Breakout, pullback, breakout, fail, or trading range. Let's head to the NASDAQ. Even the NASDAQ here. We're somewhat inside, but let me just give some perspective here once again. Find the original breakout, which was up here. Now, for that month, you see how they broke out, pulled back, first red day signals, closing breakout signals. We got our trades. Okay, cool. We're back over here. Now, we don't know what's going to happen, but what do we get when we get back there? Look where this level is at. But what do we get when we get back there? Wick rejections, exhaustion, signs of exhaustion. This pin hammer up top is a dead giveaway. When you have pin hammers up top or down low, that's a telltale sign that they're probably gonna strongly reverse because they're trapping longs. So let's scale down again. We see, or I see, the peak formations, which, just like Stacy said, the easiest way to identify peak formation is just look at the previous day's levels. But let's just go to Monday for just a second, because I also took this trade. You guys should recognize this formation here. This is a 1 hour chart. I'm not going to zoom in just yet, but this is a pump sideways and dump template. Pump coil dump. Let's look to the left here. We had a peak formation. Now, I'm not drawing the entire zone, a wick. You can if you want, because as long as we're in this area, we're in what I call, this is what I like to call it, a strike zone. But you can refine this, because once again, whenever you're jamming into a peak formation, they're most likely putting in a chart pattern. So on the day itself, what is this? On the day itself, remember what I said about this pattern. You can trade the edges. You can trade the breakouts. You can trade the pullback. Let's just zoom in. They gave all three, every single one. Let's remove this. Let's remove the numbers, all that jibber jabber. We're not looking at that right now, but this is the high, or let's just, draw out our strike zone. As a matter of fact, let me redraw it. Just gonna prove my point here. Now, if you're drawing this on the 15-minute, it doesn't matter. It's the same thing. As you can see, you're still, it doesn't matter. Going to my entry time frame, I like to trade the 3-minute, 5-minute, 1 minute, doesn't matter. But again, you can trade the edge. You can trade the breakouts. You can trade the retest. Breakout, pullback. Look at these wick rejections. Do you guys understand what you can do here? You can quite literally place a limit order here. What is that? 12 pips, 13 pips stop? You're targeting whatever. I mean, you can get some crazy risk to reward. So you say you're targeting the previous day's low as you should. It's 14, 15 R, 13 pip stop. Or you could just go with your regular 25 pip stop just to be safe. You're still getting a crazy risk to reward. You're still getting about 200 pips, 180. But I'm just demonstrating here how insanely powerful it is when you understand the model itself, the pump coil dump. Okay, you could get one of these patterns. One of these patterns could present. The shortened M is really the only one that you're either trading the breakout or the retest, because essentially you would be waiting to trade that edge. They fail to get up there. That's fine. Trade the breakout. Trade the retest. If it's a regular M, trade the edge. If it's an extended M, okay, they break out. They break back in, or they're breaking back in. Get in. Okay, you don't like that? Trade the breakout. You're underneath the EMA, and if you don't like that, wait for the retest. Now again, you may be doing this already, and you're saying, "Hey, Snap, I've been taking losses. I don't know if I'm even doing it right." You are doing it right. You just haven't given yourself enough time to see the numbers play out. So you may be letting those doubtful thoughts get to you. If you have a pump and a coil and you're getting in exactly how I stated, do that for 100 short trades, 100 pump and dumps. Now, I'm not saying trade a buy trade here, or sell trade here, or buy here. Don't do what I'm doing. Don't follow me. As a matter of fact, don't even look at me. Look at don't look at anyone else. Look at completely your charts only. If you have to, delete Discord from your device. Delete it. Because what John, Terry, Jim, him, her, what she did, what he did, what Stacy did, does not matter. What matters is what you are doing. What are you looking for? Now, again, if I ask you what setup are you hunting, you better not tell me a signal day. Because let's just keep it real. As human beings, we say things and we do the complete opposite. Unless you just train yourself to be extremely disciplined. I would rather you tell me I'm looking for pump coil dump opportunities. That way I know that you're just, no matter what signal. You may like the first red day the most, but you traded an inside day today, but you still took this. You traded a closing breakout the next day, but you still look for that. You traded a day two trend trade on Tuesday, but you're still looking for that. So again, I would rather you tell me you're looking for pump coil dumps than, oh, I'm a first red day trader, because let's just keep it real. If you don't have the capital, a lot of the times that trader is not just, they're not just going to do that. Us as humans, as traders, we want to make money. Let's just be real. You don't want to wait. It seems pointless. You're looking at other people in the Discord. They took that trade. You didn't take that trade. Now you're saying, "Oh, I should have took that." But then you take the next trade and it's a loser or break even, and now you're frustrated. Let's end that cycle today. Do what needs to be done. Keep it very simple. Another example, the Russell. They close and break out, or excuse me, let's just look at the entire week itself. You see this trading range here? Leave it alone. Unless you're trading the highs and lows, the extreme highs and lows, which mind you, there were trades at the low and at the high. But when they break out and pull back, guess what we're doing? We are not selling up here because it's a closing breakout signal and we're at the high of the week and month. That does not mean sell. Now, if you waited the next day, the day where we actually got our pattern, pump sideways dump, that's fine. But just because we're up high, that does not mean we're selling. Look what the market is doing. Whenever a market breaks out, there will be a retest. And if there is not a retest, there will be a failure to go higher for that correction to the other side. Pump, coil, dump. Once again, what do we get here on the day? Let's scale down. On the day itself, traders are looking at this and they're like, oh, I got in too late. I didn't get to trade the edge. What do? They put in a peak formation. They pull back into that peak formation. You can get in there. You can trade the breakouts. I'll just draw that whole area. Just draw the whole thing. They break out, they retest. Okay, you didn't get in there. What am I doing over here? I'm getting in. Look where that level is at or near. And let's just zoom in just a little bit. Look at the price action. They quite literally, let's look at this. Let's redraw this. I'm just take all this off. They quite literally broke out and pulled back. And I'm talking about this entire little area here. They quite literally broke out and pulled back. Look what time this candle was. The start of the new 15-minute rotation. Pin hammer, bang, we're getting in. Oh, but that's a late entry. Again, I will say this time and time again. There's no such thing as a late entry. You have the high of the day fills, you have your breakout fills, you have your retest fills, you have your low-hanging fruit fills. There's no such thing as late. So that's pretty much all I wanted to present for today. Just wanted to demonstrate how powerful basic market structure can be, even on a daily chart. They break out and fail to go higher. Wick rejections, first red day signal, first red day collapse, first red day continuations. The USCAD has given an amazing couple of weeks, past few weeks, and it's all based off of a pump, a consolidation. Which, what is the consolidation? A lot of the times it will just be our M head and shoulder formations. That's our coil. And as they're breaking down, you didn't get in up here, that's fine. When we get here, guess what we're doing? Guess what we're doing? We're waiting for that retest. We get over here, let them break out first. Wait for the retest. We get over here, let them break out and retest first. Then get in. So, um, let's see. I will post it today. Ethereum. I didn't even peep the cryptos. The crypto, same exact thing. Let's go to Ethereum. Daily charts, same thing. Let me pull up my template for that. It's just been breaking out and pulling back. Breaking out and pulling back. We're back to our breakout levels here. We dropped down. I looked at Bitcoin last week. That was pretty much the only one. But even still, look at this end pattern we have up here. Peak formation, retest. Get in at the edge. Get in at the breakout. They're gonna break out and do what? Pull back. They won't always pull back directly into that area or zone. If they're not doing that, that means they already put in a new peak formation. And guess what they're doing? Guess what they're doing to it? They're jamming into it. What model is this? Pump, coil, dump. What signal was that? Closing breakout. Let's see. On US Swiss franc after the dump. What told you slight pullback and continue trend, not pump back up? Let's see. On US Swiss franc. What told you slight pullback to continue trend and not pump back up? Are you talking about Wednesday? I hope you're not talking about Wednesday. Look at our model. Pump sideways. Thursday? Oh, we're front side trend. Down. We're backside. Closing breakout signal. Breakout pullback. Look at the closing price. If you went short from the closing price, you were in profit the entire day. No one really got trapped unless you were trying to pick a bottom. Now remember what I said. You need a peak formation and they need to pull back into it. We have a peak formation and they pulled back and broke through it. You better be selling the next 1 hour candle, the next 4 hour candle. Breakout, pullback. Keep it simple. You're overthinking this. Severely overthinking this. Yes, they already completed our pattern, but they can break out past that. They can go on a full range expansion. Thursday is day 2 on the backside of the week. What does day 2 typically do? Fill in the blank. Once I have a signal day and I'm supposed to look for the signal on the day, does that mean it has to trigger either previous day high, low first, then I can start looking for the pump and dump? So remember, we're looking for our model, for one. And two, whether they give you a signal on the day or not, I'm still looking for the model. But also three, remember our 3-step process. Step 1 is our signal. Step 2 is our level. So I will be on a higher time frame, 1 hour minimum, because the peak formations are really clear on this time frame. I need to see a breakout fail or a breakout pullback. Breakout pullback. Here's the most recent peak formation. They don't pull all the way back up to it, but they still broke out and pulled back to our closing price. Signal on the day, signal on the day. But you won't always get a signal on the day. Sometimes it's just a signal and then the next day is the trade. NASDAQ, for example, we didn't get a signal on the day, but I got my signal day. And then it's pump, coil, dump. So let me just add something here. This is your homework. This is everybody's homework. You need a notebook or a whiteboard or something. Whatever it is, I quite literally need you all to draw this out. One sec. I need you all to draw this out, please. Please, I'm being so dead serious. What I'm showing you are the templates. that I'm looking for. Because again, it doesn't matter if they triggered the high, low, or not. What are we looking for? Our model. So if you're joining the pump and dump team with me, pay close attention. If you're a dump and pump based trader, flip these upside down. The very first template is, well, let me make sure I do it big enough. Is our Asia low, London high, consolidation into the US session for our pump and dump. So our first peak formation low will be down low. Second peak formation will be up high. And the third session will be breaking down or coming from the high. Our second variation is a peak formation low, Asia low, London high, New York not only returns back to the high, but they break out of that high and then collapse. Peak formation low, peak formation high, new peak formation high, trap and shift pattern, trap and shift. Or, mind you, if you're trading pump and dumps, this is another variation. They did this on the Swiss franc. They did this on gold last week. Excuse me. They did this on gold 2 weeks ago. They did this on the Swiss franc on Wednesday. They did this on oil on Tuesday. They give an Asia high, London low that's breaking out and pulling back into the US session. We get our pump coil dump continuation. These are the only models or variations that you need to know. I can pull up 100 examples for each. As a matter of fact, this was gold on Friday. Gold and silver, slightly different, but gold and silver. Once again, Swiss franc. Um, just off the top of my head, Swiss franc, oil, gold 2 weeks ago, gold 2 weeks ago. I trade gold a lot. EuroCAD, Pound CAD, Aussie CAD, UJ. And as a matter of fact, I'm just gonna pull up some examples just to prove the point here. I'm just keeping it very, very simple. I may even just stick to gold, but I'm just gonna show you. There's a few variables. One, two, they break the high. They don't just tap it, they break it and then collapse. But we get our break and retest, low hanging fruit continuation. Flip this upside down. What is this? Asia low, London high. When really Asia was low and high, same thing. Pump coil and dump template. Pump coil dump. Get it right or get left. They gave us a signal on the day. Both of those gave signals on the day. But I'm going to go to one that did not give us a signal on the day. It is right here. They gave us our signal the previous day. As a matter of fact, Friday was our first red day signal. Monday gave us a lower low, a trap and shift for the Asian session. Yeah, they gave nail and bed low hanging fruit for the London and US session. They didn't actually break down, but look what's happening here. Let's go to the day itself. Because again, I'm just looking for basic 1, 2, 3s. Asia low, London high. Consolidation into the US session. Breakout pullback. Bang. Pump, coil, and dump. No signal on the day though. So traders were like, if you're too rigid, like you're trying to be perfect on purpose. Stop doing that. You're not going to get the trades by trying to be perfect. You're trying to find the perfect 3 session setup, the perfect level to trade off of, the perfect time. It doesn't work like that. They pump it up, they go sideways. But again, you do need a playbook so you can understand that when they give you the templates, Asia high, London low, pull back, continuation trade. They broke out and they pulled back for continuation. Up, and let me just show you that for another session. London high, New York low, pullback, continuation trade. They did it twice. This is why I love gold. Gold is the ultimate troll. Gold will literally give us the same template the entire week, back to back, different combination of setups, or sessions, different combination of days, the entire week, back to back to back. So if you miss Monday, there's Tuesday. If you miss Tuesday, there's Wednesday. Can you expound on what you mean by signal on the day? Signal on the day is whenever they break out of a previous day's level or trigger it. Oh, that's the signal on the day. Signal on the day is whenever they break or trigger the previous day level. Now, I can't even lie to you guys. I hate the fact that Stacy even brought that up because it's distracting everyone. What's the signal on the day? There was no signal on the day. Why did you take that? We're just looking for pump, coil, and dump opportunities. Asia low, London high. New York low, Asia high. London dump. But what do we have here again? Asia high, London low, breakout, pullback, continuation again. I'm glad to show y'all why, again, gold, in my opinion, is the ultimate pair. It quite literally does the same thing. Now, every pair does this. You can find these patterns and signals and setups on every pair. But again, gold specifically, Asia low, London high, New York breaks higher. They don't just tap it, they break higher and then collapse. So guess what? I'm trading the edges or the breakout or the retest. Just use basic market structure. They put in a peak formation. You see the wicks? They put in a peak formation and they pull back to it. That's a double top, which was also a break and retest, which is also a fantastic 750 pip collapse late. Oh, but that's a late entry, is it? Because it didn't actually blow off until that time. So that's not late. It's just a different style of entry. But just to go back, what do they do again? Asia low, London high, New York breaks London's high. They don't just tap it, they break it. So what are we doing? We're trading the edges or the breakout. They don't give a retest here. This is a collapse. This was the third day of breakouts in the market. Trap and shift. ACB not coming, or at least for that day. But remember, it can be any combination. New York low, Asia high, London. New York, Asia, London. So if you're the London traders, the Asia traders, we're looking for the same pattern. What do we have here? London low, New York high, breakout, pullback, continuation trade. Now, if you flip this, this is exactly what I was mentioning earlier with the variation where it's Asia high, London low, New York continuation. Let's just pretend that's Asia. Let's just pretend that's London. Let's pretend this is New York. Quite literally, there it Any pair, anywhere, signal day, signal on the day, no signal on the day. They go sideways after the pump. Now, again, how did I get so good at anticipating and recognizing these patterns? I went back and I marked up as many as I can find, but not only that, in live time, because this is where it actually matters. In live time, I'm not thinking about anything else except breakout pullback or breakout fail. That is it. If they're not breaking out and pulling back, I won't take the trade. If they're not breaking out and failing, I will not take the trade. Pump, coil, and dump template. Dump, coil, and pump template. 3 sessions. Because remember, there's a few variations. Here's the first one. Asia high. Excuse me. No, Asia low, London high. New York breaking down, consolidation, blah, blah, blah. This is the most basic one right here. And it happens a lot. I mean, they did it 2 days in a row. Again, gold is a troll. Gold will troll you for days in a row. And as a matter of fact, look what we got the very next day. A dumping pump template. The very exact same thing. Just flip it upside down. It's the same thing. 3 days in a row. They gave us easy money, but yet traders are overthinking this, overcomplicating this. First red day signal. Asia high, London low, breakout, pullback, continuation. Let me just zoom out just so I can show that not only am I focused on the model, but I am also just taking into consideration of basic market structure. That's where they originally broke out. Okay, they don't retest it. If they don't retest it, remember, there's a reason why. That's because they put in a peak formation and they retested that instead. They get there, we get wick rejections. Look at this pin hammer on the 1 hour chart. The time frame doesn't matter. You can trade the 1 hour, the 30-minute, 15-minute, 30-minute, engulfment, double top, 15-minute, double top. We're in the zone, 5-minute. Just get in. Okay, if you miss the top, wait for them to pull back. Okay, they don't pull back directly into that. They reject it right off the closing price. And that was the double zeros. And you're underneath the EMA. And you're on the backside of the pump. It's the same. So this is how I was able to get consistent. You have to look and do the same thing over and over and over. Up, here's one of my favorite variations right here. Asia low, London high, New York breaks the high. You can, what is this? A triple top. You can trade the edges, or you can trade the breakout of that M structure on a small time frame. Or even better, this is another reason why I like gold. If New York didn't cut it, guess what Asia's gonna do? Asia's gonna continue that move or complete that move. Pump coil and dump template. Asia low, excuse me, London low, New York high, Asia dump, collapse. Let's see, whoops, I have not checking the box. What's your daily process regarding your watch list? Are you watching one instrument or multiple? Let me just show you my watch list real quick. I'm already ready for Monday. Take a good look at it. Look at all those inside days. Look at all the first red days. Look at all the closing breakout signals. Now, am I literally trading all of them? No. I do favor a few pairs over the other. You all know how I love gold. But you telling me out of all these signals that you can't get one trade? Now, what's my process? Let me just show you. Let's just say that I'm looking for first red days. Traders are even overcomplicating this. Now, remember, let's just say I'm looking for first red days only. Nope, 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 nope. Skip, skip. Actually, this would be on my red list. Potential first red day signal, and they gave an inside day signal after that. This is actually in my red list, but we'll see. They may just be breaking out and pulling back. I have no idea. I still need to observe the behavior price on the day. And guess what I'm looking for on the day? Asia low, London high, New York dump, pump coil dump. Literally, that's it. But skip, I'm not going to call that a first red day. Skip, again, this market actually may just be breaking down. Let's look to the left here. They're respecting that breakout. First red day signal. It's not necessarily blown off yet, but we have all that space back to the low of the month. They're failing to go higher. They already put in a peak formation last month. Double top. Again, I'm just observing the behavior of the market, and it's either breakout pullback or breakout fail. Skip. Possible first red day here. Oh, but they're not at the high. We have a wick rejection at this peak formation. First red day signal. So guess what I'm looking for the next day? Pump, coil, and dump. That is it. Keep it simple. The first red day process, excuse me, the signal day process, as far as the watch list goes, it depends on what you're looking for. And one thing I can promise you is if you're looking for everything, you will get nothing. But if you're looking for something specific, you will get it all the time. So don't look for everything. Look for something. First red day, German 40. I'm just let you know right now, this looks very clean. You will probably see me in the London session or the US session observing the behavior price for this. This looks really good. It's at the high of the week, high of the month. Now, again, I don't know if this is actually a first red day or not. This may just be a pullback because they've just been on the up and up. But we have pump candles that potentially could be getting trapped. And if they stop them out first before they continue with the trend, that's fine. I still got my first red day trade. Would you agree there's a first red day on MES? Let's look at the ES. All of the indexes look like they're potentially going to give a breakdown. Let's see, oh, this is my red list. Let's go back. ES. I did not have that on my red list, and I would not call that a first red day. That is a very large candle. I'm not chasing that. Look where we're at these peak formation lows. We're getting wick rejections. Now, if they break through that, that's fine. But again, I am not chasing that. Now, if they pump it up, coil and dump, that's fine. Okay, it may have just been a first red day. But me personally, I wouldn't call that a first red day. Look. I mean, they've already completed the pattern here. Outside day signal on Thursday, consolidation. No, I'm not chasing that. Don't chase this. Is this the 1 hour? Oh, that was daily. But even still, we are possibly jamming into a support area level. Low of the week, low of the month. We'll see. But a textbook first red day will look like this. They'll pump, and there will be lots of space back to where that pump began. Look how much space we have back down. Do you see any space here? Back to where the pump started? We don't. So always keep that in mind. There needs to be space back down. But again, just one more time, here's the watch list, or at least my watch list. There's a lot of pairs that are potentially setting up. We have a lot of inside days. So if you like the inside day, guess what? The inside day can only do one or two things. Let's just say this is our inside day. There's the high, there's the low, and here's the close. We can get our, and this is my favorite. Once again, they break out and coil. Signal on the day. They break out and coil. Or they do it in the other direction. They break out and coil. Remember the textbook variation, Asia, London, New York. Don't forget it. Remember your homework. You need to draw those out. Draw them. Or they will break out and pull back. Asia high, London low, pulling back into the New York session. Or they'll break out and pull back. Dump coil pump. Inside day signal. Do I know exactly what they're going to do? I do not. And I don't even try to I don't even let my mind get too wrapped up in all that. Because again, the process is what I'm focused on. I can't mess this up. If I'm seriously only looking for this, there's no way you can mess that up. If you're only trading these, there's no way you can mess up. Even if it's a losing trade, if you're following the process, how are you messing up? How are you doing anything wrong? Remember, trading is not a 9 to 5. Easier said than done to get out of your system, but day trading is not a 9 to 5. This is a lifestyle. Wake up, signal day, levels, pump coil dump, dump coil pump. For me, here's my process. Wake up, push-ups, sit-ups, pull-ups. Okay, then I'm allowed to look at the chart. If I don't work out in the morning, I can't. I can't look at the chart. I need to wake my brain up. I'm one of those slow wakers. But it's signal day, levels, pump coil dump, dump coil pump, eat. Then whatever the rest of the day I'm doing that. Not even focused on the chart. I may have Zoom sessions, okay. I'm focused on the session, but I'm not focused on my own trading. I'm done. I'm not focused on, oh, I should have did this. I should have did that. I could have did this. I could have did that. It's pump coil dump, next trade. Pump coil dump, winning trade, next trade. Pump coil dump, break even trade, next trade. Pump coil dump, break even trade, next trade. Pump coil dump, losing trade, next trade. Pump coil dump, parabolic. Makes up for all the wins, break evens, losses, done for the week. So, any other questions? Let them fly. ZM1. I don't know what pair that is. Soybeans. Uh, Again, I don't know. If you're asking me if it's a signal day or not, I don't know. You're gonna have to come back and look at what they're doing the next day. Now on my chart, that's actually whoops. I'm about to say that don't look like no first green day. Uh, uh, Go back to the beginning of the video where I talked about the three things that markets do. I forgot what pair that was. It was one of these pairs. Oh, it was nat gas. I said don't call the first green day or bullish candle a first green day. Don't call that a first green day. I'm going to say the same thing for soybeans. Do not call this a first green day. This is a market that broke out. So guess what we can expect? A pullback. Now that doesn't mean that this is going to give you a buy trade or not. You may get a dump coil pops. But if you go back and look at the most textbook first green days like this one, that's a first green day. And then look what they did after. This was a market that broke out and failed. So some psychology advices, some psychology tips. I do have a few. One of those is that you actually need to build mental capital. So if you're looking to pass a prop firm, okay, focus on that. You need to be very careful with that first one because the first one is gonna that's gonna be the momentum for the rest of them. I see advise if you're gonna get funded that you get multiple accounts, don't just get one. Because on that one account, you're gonna be scared to trade it. For example, I have five 150K accounts on Top Step. Five. I got funded with all of them within the past 3 weeks, 4 weeks. It only took me about 3 weeks. The first one was the hardest one. To be very careful with that one. But after the first one, I got the second one. And I was careful with that too. But the third, fourth, and fifth, I knocked them out quick, quick, quick. And how? Because I wasn't scared to lose them. I already had two. So even if I blew the third one, I wasn't really pressed because I have two. So for example, if you don't have funds in the back of your mind or the back of your pocket, it's gonna be hard to trade because what whether you believe it or not, whether you say so or not, you're going to be trying to make money instead of just focusing on the process. So if you're trying to make money, you're definitely going to lose money. So that's psychological tip number one. Psychological tip number two, do not look left, do not look right, do not look down. Trading is just like walking a very, very tall bridge. If you're crossing the bridge and you look down, guess what's going to happen? Fear, doubt, FOMO. Oh my God, I'm so high up. Now you're scared to walk the bridge. So don't look down. Same thing if you're climbing a mountain. What do they tell you? Your instructor will tell you, don't look down. As a matter of fact, there's a Bible verse. I'm paraphrasing this, but their city was getting literally blown up. Literally, God was sending fire to their city, and He instructed the people. So there was uh, again, I'm paraphrasing, but they were on the way out, and He instructed His wife and everyone else not to look back at what He was doing, or else He was going to kill them. And she looked back. So guess what happened to her? She died. Same thing with trading. You look left, you look right, you look down, you look at anything else besides this, tilt you go. Losing trade you go. Agony, fear, doubt, it's all gonna creep in. Yep, Sodom and Gomorrah. Thank you. Thank you. She looked back and died. So just think about that. Trading the same way. Don't look back at your last trade. Why are you looking back at your last trade today? Why does it matter? Oh, but I lost the last trade. That's why I lost confidence on this trade. Well, you just said why you lost confidence. So why are you looking back? Again, it's easier said than done. But to be honest with you guys, I took a big loss like a week and a half ago. A big loss. And it upset me. It was a stupid loss, rookie mistake. It happens. But what I did was I sat on my hands. Free cash Friday came up, no trade. Okay, sat on my hands. Free cash Monday came up, bang, got it right back, or got what I lost right back. So, point of the matter is, you're looking back at your previous trades. If it's not something that's in your playbook, now that's different. Now I'll look at my playbook because I'm rinsing, repeating. I'm integrating this model. I'm reinforcing the fact that this model works. And the times that it does work, I'm gonna scale in. I'm not gonna be scared to get in and scale in. So for example, traders always ask me this, how are you scaling in? I may put in a starter up top. What is a starter? It's just a small position. And then I'll add again as they're breaking out. And then I'll add again as they're breaking out again. That's how I'm scaling in. Are you going to add to the playbook? I would have to make a whole new one. But I will make something to kind of give some really good examples of this as far as scaling in, or I may even just make a video. Um, but yeah, I was already thinking about making new material anyway, but because again, my previous playbook, it's really good, it's really simple, but I've simplified it even more since then. I'm not looking for lower lows on the inside. I don't care for peak formations, if you ask me. I see my pattern after my signal, and I'm in there. They break out, they pull back, I'm in there. They break out, they fail, I'm in there. I would just get in, place my stop at the extreme with a starter. And as it's confirming, I will scale in. But again, US Swiss franc was probably one of my favorites. I love the first red day. There was another first red day we got last week. What pair was that? Was it UJ? Yep, it was UJ. First red day, breakout pullback, pump coil, dump template. Once again, don't be scared to get in. Just get in. Remember the basic entry model. You can trade the edge. You can trade the breakout. You can trade the retest. Just get in. So any other questions that I may be able to answer, as far as psychological tips, honestly, the majority of my trading psychology comes from my athletic background because it's the same thing. I can't be worried about my last shot. I can only worry about the current shot. I can't worry about the last game. I can only worry about the next game. And when I'm in the game, I can't be worrying about if I'm doing anything right. That's what practice is for, your playbook. But when you're in the game, you are not to be thinking about anything except the objective, which in my case was basketball. The objective was to put the ball in the hoop. It didn't matter how, right hand, left hand, assist, dunk, layup, jump shot. Just put it in the hoop. Get it in there. And then on the way back, defend our hoop. Defend our side of the court. Soccer or football, basketball, boxing, baseball, gaming, even just something as simple as washing your dishes. When you're washing your dishes, you have one side that you're soaking and one side that you're rinsing. And hopefully you're wiping them off and then placing them in the dishwasher. But you see how that simple process gets you clean plates? Simple process. Let's see, a session on your techniques on a starter position and scaling in would be awesome. We can do that next. But just food for thought. As a matter of fact, because the past two trades were trades that I scaled in, I'm just going to show how and where. But once again, it's all about the model. So just think of the model. When I was taking this trade on Thursday, again, I'm looking at the clock. I see bullish sentiment. What is bullish sentiment? Higher high, higher low, higher high, higher low. As they were breaking out, I got in. They broke out and pulled back. Okay, I wasn't scared. One of my positions broke even, but not all of them. But yes, one of them broke even. But as soon as they were engulfing again, bang, bang, bang. I mean, I just kept adding, bang. And why am I keep adding? Because I'm looking at the 15-minute candle. I'm on the 15-minute time frame. After I place my positions, I'm on the 15-minute time frame, and that 15-minute candle better stay bullish. And then the next one better be bullish. I added again. I closed everything up here. But same thing with silver or even gold on Friday. I wish I was actually looking at gold. Again, I didn't have too much of a choice. Your starter position can be the edge. You can scale in as they're breaking structure. And then when they're retesting, now again, I honestly don't even need to make a video about this. What you need to do is your homework. What is the homework? Draw these out. Draw these out. And then tell yourself there's always at least three areas or types of entries: the edge, the breakout, or the retest. If you cannot keep it that simple in live time, I'm sorry to say this, but you're not keeping it simple. You're not focusing on a sell high setup. Focus on a sell high setup. And then when it sets up, remind yourself, hey, I can trade the edge. So when they go to the high of the day or that session, place a position, a starter. And when they're breaking out and confirming underneath the EMA, get in again. And then after that first pullback, get in again. That's when you hammer them. You own them. They're supposed to blow off by that time. Trade the edge. Trade the breakout. Trade the retest. Remember, the short and M is the only one where trading the edge may not be as ideal. Okay, there may be a high bull resistance there for a starter, but trade the breakout and then that first pullback, get ready to scale in. So honestly, this is because if I was to make a video, this is literally what I would say again and again. And I would show examples like silver and gold and the NASDAQ and the Swiss franc even. They break out, they pull back. I'm getting in at the edge. I'll just place my position. You see this engulfment? Here's my first position. See that breakout? That's my position number two. You see the first pullback? Engulfment? I'm in again. Bang. Done. Same thing with gold. Excuse me, silver. I keep saying gold. You can trade the edges. You can trade the breakout. And after that first pullback, you own them. You own them. And plus, you're already significantly in profit by that time. You shouldn't be scared. Get in, place another position. Now, max, on a live account, I'm risking up to 10, 15%. Are you trailing your stops? Honestly, I do not trail my stops. If I'm entering again, I'll just place a stop behind that entry. Now, I will break even on those, but this is just how confident I am in my trading. When I'm scaling in, I'm just watching it go to TP. If anything is off, I will close the whole thing. But trades like this, for me, that's very often. I get in and they just blow off. I don't even go to break even. I don't trail stops. I let it go to my target because what do we have here, Sultan or Muhammad? What is this? It's supposed to go back to where the pump began. It's supposed to do that. So I don't trail my stops. If it's not doing that, I don't want to be involved. NASDAQ on Monday, silver Friday, gold on Friday, gold on Thursday, gold on Tuesday in the Asian session, UJ on Thursday, Swiss franc on Wednesday, Russell on Friday, US 30 on Wednesday and Thursday. You name it, copper, GU, EU. It's all the same stuff. Pump, coil, and dump. Look at this very carefully. I'm being so dead serious. I'm almost running out of ideas to simplify this. Asia low, London high. Look at all this chop. This is not scaring me. I'm actually licking my lips. What about the lower low on the inside? I don't even pay attention to that. I'm paying attention here and here, and that's it. The coil, the high and the low of that coil. That's what I'm paying attention to. Many, many charts over and over. Pump and dump, pump and dump. Signal day, set up. First red day traders, trade the day after the first red day. If they don't give it, come back the next day. Closing breakout traders, go to the daily chart. You better be at the extremes. Or if it's a trend trade, okay, it can be with the trend. Inside day traders, don't try to figure it out because there's only one or two things. Pump and dump and pump. Trend trade, reversal trade. But if you're in a front side trend, believe that. Believe it. You're still in a trend. If they're breaking out and failing, okay, that's different. If we instead start with a small position and learn to scale in when we're right, exactly. That's not exactly how I started. I actually started out as a serious gambler. It just depends on your personality. Just for me, I was never scared to get in. Now, did I significantly damage myself psychologically, mentally, and physically? Yes. Do I regret it? Yes, because there was an easier way. But again, just get in with a starter. And as the position is confirming, scale in. Don't be scared to enter. That's what the EMA is for. Get in. Any other questions? Don't be scared to let them fly. We've been on for quite some time. I don't want this to be too long. I want you to be able to watch it again and again. Are you still using the 4A maze? Yes, I am, but I took them off for today just to show how strong these level. Look where the EMAs are. Look where the zone is at. Look where the levels is at. At this point, you can choose. You can literally pick and choose what you want to do. Again, there's no right or wrong. Pick a process and stick to it. Now, don't come back at the end of this week and say it's not working. What am I doing wrong? It's only been 1 week. How many times have you taken the same trade in a row? When I was playing basketball, I can't tell y'all how long I was in the gym in the same spot, shooting the same jumper in the same exact spot, 500 times in a row, 1,000 times in a row. My wrist was hurting, my back was hurting, ankle was gone. Same jump shot. And then guess what? I had to come back and do it again. I became a sharpshooter. But the process of becoming a sharpshooter, people don't want to go through that. So if you want to be a sharpshooter, guess what you got to do? You got to put in those reps, not just for the week, for weeks. Now, it only actually took me one summer to get really good at shooting. Ironically, it only took me one summer. I would go to the gym, put in my reps, and then when I'm going to sleep, guess what I would do? I would visualize what I did in the gym in my mind. That probably made my learning curve a lot faster because not only was I actively practicing, but I was also mentally practicing. Every night before bed, I would visualize it, visualize myself shooting the same jump shot over and over and over. And it got to the point to where I came back the next summer and literally everyone in the gym was like, well, dang, how did you do it? Reps. Same thing with boxing. I can't tell you how many times I didn't punch the same pad over and over in the same spot. I'm sore. I would tell the coach, hey, I'm freaking tired. I can't breathe. Duh. Punch it again. Punch it again. 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 Your form's getting sloppy. Punch it again. And again. Your form's getting sloppy. Pay attention. Keep your hands up. Loosen up those shoulders. Spread your feet. Keep your hands up. Any more questions? That's the head and shoulders, by the way, right here. Yes, those can be trend trades. They're not always reversals. It's with the trend. Up and down. If that's all, watch this video again and again and again. Breakout pullback or breakout fail. Pump coil dump. Dump coil pump. Look at the wicks. The wicks tell us a story. Wicks do the damage, bodies tell the story. But the wicks will do the damage. Those wicks on a small time frame are peak formations. The M's, we're paying attention to those. We're paying attention to the edge. We're paying attention to the breakout. We're paying attention to the retest. Keep it simple. Thank you all for attending. I have like 4 videos to post. This is one of them. I mean, I'm going to upload them all as I speak. I owe some of you guys a video or two. And then the rest of you guys that are waiting for this, once again, I'm going to post it today. And then I will see you all next week. Free Cash Wednesday, Free Cash Friday, same thing. We're looking for signals. We're looking for easy money setups. Keep it simple. Rinse and repeat the same process. I promise you, if you can do that for 90 trades, it sounds like a lot, but if you can do it for 90 trades, the numbers will play out. That's really also just another psychological tip for you. Do not worry about the end of day results. Just worry about the daily process only. Pump, coil, and dump. I know you guys seen Stacy's post about his son. He's a year in, only 1 year in, and he's finally getting it, according to Stacy. It would be nice to have that one-on-one mentorship, like in person, like he's getting. But I can assure you all, if I was Stacy, I'm pretty sure if I had a son and I was doing the same thing, I would be so very, very strict on the basics only. And I would say, forget it with all that other crap. It's pump, coil, dump on Thursdays, and that's it. You do anything else, that is on you. Yes, sir. Yeah, buddy. Keep it simple. And then the recording here. Peace.